Happy Easter, y'all. This your boy Next Level Stock, and today we're going to analyze and discuss the S&P 500. So we all know that the S&P 500 is rolling at about 4,100 right now, and for the year it's down almost 7%, or $300, which is pretty good. So this is an important week for the economy, just because we have a lot of information coming out this week. And let's get into it. So Wednesday, so we all know Wednesday we have the CPI releasing, the Consumer Price Index. So that's going to tell us what's going on in the economy. Is it doing good or what? The expected number that's coming out with the CPI is at 5.2. Anything below that, we're going to be green light the whole way for about a good week. And anything above that, is going to fall. And we'll go over that and later in the video. And Thursday, we have the PPI coming out. They're going to discuss the PPI, the Consumer Price Index. And on Friday, the U.S. import and export prices index going to be discussed and talked about and released. So if y'all don't know what the U.S. import and export price indexes is, read this. Let's read this. The U.S. import and export price indexes measure average changes in prices of goods and services. Do y'all know what that means? So this is going to let us know is prices going down or it's going up. Basically, it's going to give us a little glance of how inflation doing. And that's a good thing. So that's why I say this week is an important week for the economy. So our thoughts on the S&P 500 right now is very, 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 very determined on how this week go. And a lot of people right now is saying that that everything is slowing down and it's going up, and we can see the charts right here that inflation has been going down. So we are looking at a good result of this week, and we're looking at a green light this week for as what the numbers are telling us. And if we go back, if y'all don't know, the best thing you could do in investment is DCA. So DCA is a dollar cost averaging. So if you dollar cost average into anything, you're going to have a more balanced portfolio for you. So if you DCA, no matter if you DCA every week or every month or every 2 months or whatever the case may be, but I feel though it's best if you DCA every day. For example, if you invest $80 a day, that's roughly like what? Like $15 or $16, something like that a day. So you want to touch the market every day. So whatever the economy doing every day, you touching it. You getting your average. You balance your average out. You touching the market. You touching your stocks every day, and that is something you don't have to physically do. You could set it on the auto pay every day, and they'll do it for you. So we'll go about that, talk about that in another video. So right now we look at the S&P 500 right now. We see a lot of people. We look at options. When you look at the option volumes, options tell you a lot about what the people doing on the day trading side, because that play a lot of support in volatility of the market too, especially the S&P 500, because the S&P or the SPY it moves based off the economy. So if we look right here, the strike price is $400, meaning that it's a very low that a lot of people is putting in the money calls on this. So look at this number, 730. Look at this number, 730 volume as of right now on in the money 400 strike price. But now let's look at the put side, meaning that they feel like the market is going to go down. The volume is 46,000 compared to 730. So this telling me that everybody feel like the market is going to probably tank tomorrow, and probably for the next couple of days until they release the indexes or the CPI and the PPI. So this is giving us a very clear view on where the market headed, just because a lot of people putting a lot of bids in, saying that the puts is going to run the week, and that's one of the things I do when I DCA every day. Because when I DCA every day, I kind of do it myself, because it takes 5 minutes, and I want to get the right amount of price. So if the S&P, if the SPY is trading, the highest is traded in one day was 411, and the lowest it traded at was 407. See, if you put it on auto, it maybe give you a range between 411 and 407. But when you do it yourself, you can honestly manually do it and say, look, I'm gonna just do my $15 at 407 when you see it hit 407, because you feel like that's a good price to have for the day, and you move on to the next day. So that's how I do it, and that's how you keep your prices low, and you can basically almost, it's like an 80% guarantee that you could beat the market every single year by doing that strategy. And when we look at let's go back. When we look at these inflation numbers, it's telling us that everything's look like it's going down. So I'm thinking that Monday and Tuesday are going to be a red day, and when the information come out, we're going to be a green light for a good 2 or 3 weeks until Powell decided if he want to reach, if he decided if he want to go up with the interest rates or not, if he want to pause it or whatever. If he pause it, good. If he go up 25 basis points, is okay. But anything other than that, it's going to tank back down. So that's all I have for today. If you like this video, like, subscribe, and let your boy know what you think. I'm out. Peace. Thank you.